Hello, welcome to our new series on economic insights. My name is Audrey Whittington and I am here with Danielle Hale. She is the chief economist at Realtor.com, and today we're going to be talking about new sales. Is that correct?
Yes.
So what does new sales mean? We've talked in other series about existing sales and pending sales. So what does new sales mean? Like, what is it defined as?
Well, so as you can probably surmise from the name, new home sales are based on homes that are newly constructed. So existing home sales tracks homes that are already existing,
Right.
and pending home sales relates to those existing construction. New home sales is tracked by the government, so it's different than some of those other data which are tracked by a private organization. It's tracked by the Census Bureau, and it covers new home sales.
Right.
Like the pending home sales, new home sales are based on contract signing. So it's a little bit different than existing home sales. It's just tracked at a different stage in the process. And the reason the government does it that way is because it's a bit of an early indicator instead of looking at when the home actually closes and title is exchanged. They track at contract signing. And for new home sales, that can occur at any stage of construction. So after the permit is drawn, after the building is already started and underway, or even after it's finished being built.
Sure. Actually, I used to sit on a new home sales trailer, so I know exactly how that works. So why do we care about new home sales? Why is it an important economic indicator? And you said it's only because it's only about 10%, correct, of the general sales. So why are we paying attention?
Yeah, so new home sales are a much smaller portion of housing market activity. Existing home sales are anywhere between 85 and 90% of activity. Right. The number of new homes that are sold is much smaller. But when it comes to economic activity, they have been outsized importance because when we measure overall economic activity, we're measuring all new production. So since existing homes are not being newly built, they don't all count, or the sale doesn't count into our measure of overall economic activity, or GDP. It's not new production. But new home sales are entirely new production, so they feed into that measure of government of economic activity that the government tracks, and that's why the government tracks new home sales. It's very important to measuring overall economic activity.
So let's talk about, you know, what the GDP is. I personally am not 100% sure what that means. So what is the GDP? And let me see if I'm understanding correctly why new home sales are important to the GDP. It's because I think new home sales involve lumber, they involve jobs, so perhaps a little different than an existing home sale. It brings in a lot of different other segments of the economy. Is that correct?
Yeah, so GDP stands for Gross Domestic Product. It is a way of measuring everything that is newly produced in the U.S. That's why it's called domestic, so what we're producing here in the U.S.
Nothing international.
Another way, that's right. Well, so imports and exports factor in. Imports are a subtraction, exports are an addition, because we're focusing on what's produced here. So there's an international component, but yes, definitely a domestic focus. And another way of thinking about it is all of the income that's generated from that production, that new production. So since new construction is new creation, people are actually in the process of building that home right now. Everything that goes into that new home construction is new production and is counted in GDP. So if the new home price is around $300,000, which it is, every time a new home is sold, that $300,000 gets added into gross domestic product for economic activity. On the existing home sales side, it's not new production, so you're not adding the whole price of the existing home into GDP when it's sold. Instead, you're looking at the new economic activity, which is the transaction income to real estate agents and to mortgage brokers and to movers and everyone who helps make that transaction possible. So they're both really important to economic activity, just the magnitude is a little bit different.
So two follow-up questions for you. One, how often are new home sales actually tied to existing home sales? Do you find that these indices can be like really disparate? So let's start with that one.
So they tend to move in concert because the things that are causing people to get excited about what's going on in the housing market and to buy an existing home are very similar to the things that would lead people to think about buying a new home. Sometimes people think of them as complementary because if you're in the market for housing, some people have a strong preference between buying existing and buying new, but some people don't. So in some ways they can be a little bit of a trade-off depending on the relative prices. But yeah, so the factors like consumer confidence, employment that drive the existing homes market are very similar to the drivers of the new homes market.
It's unlikely they would be inversely related.
You don't generally see a huge spike in one and a decline in other.
All right, that's helpful. And then my other question is, just in terms of talking about the GDP, besides homes, what else is like one of the major factors of the GDP that might swing it? So we know we're looking at, this indicator of, new homes. What else might we look at?
Yeah, so in addition to homes, another factor that's really important is the jobs market. That's a good indicator of economic activity. When people have jobs, they are generally jobs where they are producing something. So tracking the employment metrics are a good way of looking to what's likely to happen with GDP. And the nice thing about the new home sales data and the jobs data, they come out monthly. GDP data is measured quarterly and then fine-tuned each month.
Interesting. What are we looking for in terms of trends over time? Have we seen these massive trends up and down? Is it really, candidly, does it go with a recession, or is that what we're looking towards, or is it really kind of small fluctuations and it's, small waves?
Yeah, so new home sales lately, because they're coming off of a fairly low level that they reached during the last recession, they've been growing pretty robustly. This year they're on track to grow about 7%, and in some recent years they've grown as much as 10% year over year, which is really quite fast, but they're coming from a fairly low level. So they're really sort of trying to catch back up to normal. They still have quite a ways to go. So they're not quite there yet. I think there's plenty of room for new home sales to improve, especially relative to the level of housing activity that we're seeing in the existing home market right now.
Oh, great. Well, that's interesting. Well, let's hope it only continues on the rise. Thanks for watching this video. If you enjoyed this video, don't forget to watch some of our other series on economic insights.